Good afternoon, ladies and gentlemen, here in Tokyo and in Japan, and good morning to everybody listening and joining us in Austria. My name is Ingo Malochschmidt. I'm the Austrian Trade Commissioner and the head of Advantage Austria here in Tokyo. It is a great pleasure to have you this afternoon or this morning at our webinar here with our guests from EY Japan. And we are going to talk about an issue that maybe has slipped a bit our attention during these last few days and weeks of this COVID crisis, but which is especially important right now, which is taxes. At today's webinar, we will have 3 experts from EY Japan. But we are also going to be joined by Hans-Peter Musal, who is a partner of EY Japan Business Tax Services, and he joins us with 3 of his experts. We will have Mr. Jürgen Georg Dumont, who is manager at EY Accounting, Compliance and Reporting. He's an old friend as well. And 2 further speakers, Satoru Araki, who actually speaks very well German, but this afternoon we are going to have our seminar in English. And also Bolash Nadur, who is also associate partner at the Business Tax Advisory Department at EY Japan. Before we start, I would like to give you a few house rules so you don't need to ask them. There will be a Q&A session at the end of the webinar, but you can pose your questions already during this webinar. You can pose your questions with the chat function, which on most computers, on most screens, you should see to your right, but it depends, of course, on your setup. There is something marked questions, and there you can pose your questions, which we will see, and we will try to answer. Our experts will try to answer towards the end of the seminar. And yes, you will be provided a copy of the slides, so you don't need to take notes of all the details. We will send these slides to you together with a link to a recording of this webinar. So if you don't understand anything, or you want to have one of your colleagues listen or watch in again in 1 or 2 days' time, we will send to all participants the link to the recording as well. And yes, all participants will receive also the Advantage Austria Tokyo newsletter. So this is the bonus which you get, which will inform you about future events and interesting Austrian products and technologies. This our newsletter only comes out 3, 4, 5 times a year, more or less. It's in Japanese, and of course you can unsubscribe in case you don't read Japanese yet. And yes, when you leave the webinar at the end, there will be a very short feedback form, which we would like to ask you just to answer so that we know if you like the webinar or if there's something where we could improve. Just let me introduce Advantage Austria Tokyo, because I think a few of our attendees do not know us very well. Advantage Austria Tokyo is Austria's official trade, investment, innovation promotion agency here in Japan. Our main duty is connecting Austrian and Japanese companies. We do this through information, through coaching to individual companies, and we do it through events. Right now, a lot of these events, like this one today, in the internet, of course. We are located in Tokyo, in what I used to call Little Austria of Tokyo, which is Moto Azabu region, because the Austrian embassy is basically next door in the parallel street. We also have the Austrian National Tourism Organization just around the corner, and of course our office is here at Advantage Austria. And yes, we are also home to the Austrian Business Council, or ABC, And those of you who do not know this networking group, which acts a bit like a chamber of commerce, bilateral chamber of commerce does of other countries, we will be glad to provide you some information together with well, when we send out the material that I mentioned. Okay, ladies and gentlemen, without further ado, I only would like to introduce to you one of my colleagues here, Dominik Vranisic. He is commercial officer here with us, and he's also in charge for your inquiries regarding taxes, regarding well, or legal matters, all these things. He's not the one who will give you legal advice or tax advice. This is what we have our partners for, our lawyers and our CPAs, like today with EY. But yes, he is your first point of contact here at Advantage Austria for these matters, and he will then hand over to our experts and friends from EY. So I wish all of us a very fruitful afternoon of about, well, not a whole afternoon, about 1 hour of a webinar and Q&A session. Thank you.
Good afternoon, ladies and gentlemen. Also, hello from Tokyo. From my side, my name is Dominik Vranisic. I'm a commercial officer here in Tokyo at Advantage Austria. And as Mr. Lochschmidt just said, I'm basically in charge here of regulatory measures on the Japanese market, legal and tax-related inquiries from Austrian companies, but also from importers here, local companies, subsidiaries from Austrian companies here as well. And basically, I am able to handle inquiries in English, in German, and also in Japanese. So 皆さん、もし何かご相談とか問い合わせの件がありましたら、ぜひ日本語で対応できますので、日本語でも手軽にお問い合わせください。And just some basic information also to our activities here in Japan relating to other webinars that we have done so far. So I would like to mention here 2 webinars that we did. One being especially interesting for Austrian companies who are doing business with Japan. So the EPA, the free trade agreement between the EU and Japan, which has been in place since February last year. We did a very interesting and long webinar on this. So unfortunately, some companies are still not using the advantages or the benefits that these changes could provide to them. So that's really good recommendation for you to check this out. And the other one being a very recent topic, namely loans and subsidies for small and medium enterprises here in Japan, also relevant to companies that are in cooperation with Austrian companies or smaller businesses here in Japan, which are foreign affiliated as well. So without further ado, I would like to hand over to Mr. Lochschmidt.
Okay, thank you very much. Yes, this was outside of the schedule because I forgot to mention the polls. And right now, I would like to launch such a poll, which you will see in a second on your screen. And we would like to ask you which company you are representing. Is your company a subsidiary of an Austrian or other foreign company? You can check this box. Is it an importer? Does your company import from Austria or other EU countries? Or are you an exporter to Austria or other EU countries? Or do you have no relation at all to Austria? Or do you have no relation at all to EU countries at all? So please give us your questions. I see a few of these answers already coming in. We'll give you just a few more seconds for that. Only about half of you voted. Oh, it's going up to 60%. So I see most of you have found this feature of the software. And during the presentation, we will have another 1 or 2 questions for you then during the presentation of our EY experts. So I see we've got about 80% in. So let me see if we can get it on the screen. So I see 56% have answered that they are a subsidiary of an Austrian or other foreign company. 32% are importers from Austria, other EU countries. We have no exporters today to Austria or EU countries. And 12% have no relation to Austria, but yes, some relation to other European countries or EU countries. Okay, I will just leave the screen on 1 more second, and then we may hand over. Then we may hand over to EY Tax Japan.
Thank you. Good morning and good afternoon, everyone, and welcome to our COVID-19 webinar with Advantage Austria. We would like to thank Dr. Lochschmidt for his kind introduction and for giving us the opportunity to present COVID-19 related tax measures. These measures may present an opportunity to you as audience of today's webinar to mitigate the impacts from the current situation. My name is Jürgen Dumont and I shall be your moderator for today. I'm a tax manager at EY Tokyo, providing tax advisory and outsourcing services. The Japanese government has introduced a series of tax and fiscal measures for dealing with the COVID-19 situation. Today's webinar will focus on presenting tax-related measures from this stimulus package, but we will also look at other opportunities to reduce tax-related burdens. We have about 45 minutes to introduce the measures, and for another 15 minutes, we will be happy to respond to your questions you may have. The presentation will include polling questions, which will give us a chance to learn about your current situation and to learn about the impacts from COVID-19. For presenting the topics of today's webinar, I'm joined by my colleagues Satoru Araki, Director, and Balazs Nagy, Associate Partner. Prior to joining EY, Satoru has spent about 20 years in the NTA, the National Tax Agency of Japan. He was leading the transfer pricing divisions of the Tokyo and Osaka regional taxation bureaus. He has also spent time on overseas assignments and was delegated to the Netherlands and to the OECD in Paris, working on BEPS topics. Satoru joined EY 2 years ago in our tax policy team. As the implementation rules concerning COVID-19 measures are still developing, we will not be able to address all details of the rules today. But it will be a great opportunity to learn from Satoru's insights, as he has worked in the FSA tax division in March 2011 at the time of the great Tohoku earthquake. Accordingly, Satoru understands how the tax administration works in a crisis mode, how to apply much needed flexibility when dealing with a tax office, but also how to deal with limited means in a challenging situation. Satoru.
Hi, ich habe die Titel. Ich heiße Satoru Araki. My name is Satoru Araki. Ich freue mich, heute über die steuerlichen Maßnahmen sprechen zu können, die infolge der Corona-Krise eingeführt wurden.
Next is Balazs Nagy. Balazs has been with EY Japan for over 12 years. He first worked in the transaction tax team and has a lot of experience with topics around mergers and acquisitions. More recently, Balazs has worked as an associate partner in our business tax advisory team. He has carried out a number of projects to advise on measures to optimize tax, cash tax and corporate tax rates, with a focus on large and medium-sized foreign businesses operating in Japan. Balázs.
Hello, my name is Balázs Nagy, and I'm very happy to join this webcast.
By the end of April, the Japanese government had passed various pieces of legislation due to COVID-19 in order to apply countermeasures to a sudden economic downturn. The first stimulus package has a total value of 116 trillion Japanese yen, which roughly translates to 1 trillion euro, or in other words, 1,000 billion euros. This staggering amount shows how serious the government believes the impacts of COVID-19 will be, affecting both businesses and society as a whole. The first stimulus package covers the following initiatives: tax deferral measures worth 26 trillion Japanese yen, which we will cover in our webinar today. Supply chain support, employment subsidies, cash outs to businesses and individuals. In the meantime, during the month of May, a second stimulus package has been introduced, similar in size, which may be passed by the middle of June. Those additional measures are related, among others, to providing subordinated loans by state banks, handing out rent subsidies for small and medium-sized enterprises and students, and increasing the daily allowances to subsidize payroll costs of companies. Our today's agenda will cover the following topics: the deferral of payment of various taxes, the expansion of rules to carry back tax losses, reducing the outflow of taxes in relation to scheduled interim payments, and the deferral of import JCT and custom duties. And finally, we will give an overview of opportunities on how to improve the cash tax position and how to reduce the tax burden in general by optimizing the effective tax rate of your corporation. Now, we will move on to our first polling question.
So hold on, you are not able to answer the question here on this slide.
Yes, they will be shown on your screen in a few seconds. So please wait a minute, or rather a few seconds, apologies. Throughout the seminar today, there will be 3 polling questions. A polling question is an interactive tool by which you will have the chance to submit answers to our questions. With this, we will have the opportunity to understand more about your current situation during COVID-19, and you will have the chance to benchmark yourself against other businesses. Our first question is the following: how is your business progressing in this year, considering the COVID-19 impact? Please submit your response as soon as you can see it on your screen. The possible answers are: 1, smoothly, relatively few issues. 2, sales or activities declining less than 20%. 3, sales or activities declining 20% and more. 4, not clear at present. Why are such questions relevant? Even though the government has introduced tax measures to support businesses, some benefits will only be provided if the company can demonstrate the need for help and can prove hardship from the current situation.
Okay, about 2/3, 3/4 of our audience has voted.
So the votes are coming in, and I think we have a good view now to present the results to you. As for question 1, smoothly, relatively few issues, we have no hits. So this is a 0 answer. So that means everybody is facing issues. The second question is 27%. So less than 20% decline in activities or sales. The majority, with 55%, is impacted by more than 20%, and not yet clear at present is 18%. So this shows to us how serious the issues are, and we are happy then to be able to present ideas on how to respond to them. Now that we understand high level the implications of COVID-19 on your business, let's look at the tax measures in more detail. Satoru, could you please walk us through the practical aspects of how to utilize the instrument deferral of taxes?
Payment deferral is available to tax and social security contribution. Deferral means payment is postponed. Deferral is it's not granted automatically. Taxpayers have to apply to the district tax office for national taxes. Applications are then reviewed by district tax office. There are conditions for payment deferral. Companies are required to demonstrate that revenue have been decreased due to COVID-19. Okay, so next slide. Yeah, 1 year of payment deferral can be available to a wide range of tax, both national and local and social security contributions, and they are applicable to tax the payment which is due between February 2020 and January 2021. In order for taxpayer to be granted a payment deferral, condition is that revenue in a given period, which means 1 month or longer, have been decreased by approximately 20% in comparison with the previous year. The slide shows the example of February, but the measures are not fixed in February. Taxpayer can use March figures or 2 months period of March, April. Another condition is that taxpayer faces with difficulty to pay tax at once, and taxpayer required to indicate the cash flow situation for the coming half a year in order to calculate how much taxes to be deferred.
Thank you for providing this overview. I would have a question. Will these measures be restricted to companies with a certain size?
Any enterprise can apply for it, regardless of whether it is a small or medium-sized enterprise or a large enterprise.
Thanks. Furthermore, we understand that the rules for these measures are still general and unspecific in some areas. Given the need, however, to engage with the tax office, what should companies do?
So far, we still have to learn how the tax authorities are applying the rule. So if the companies are clearly going to fall within the rules, we would suggest engage with the tax authorities straight away. But on the other hand, if company have a complicated story or may not fall within the criteria, for example, revenue reduction or cash flow, again, we would suggest engage with tax authorities.
As time has progressed since the measures have been implemented, the NTA has issued a leaflet to explain the key points for applying for the deferral of taxes and social security payments. Satoru, could you please highlight the key aspects shown in this leaflet?
This is a screenshot of a leaflet of the National Tax Agency on payment deferral. The significance of this brochure is that it is a nutshell on a payment deferral in 2 pages covering key information. Having flowers in the middle means a friendliness towards the taxpayers. While in the previous deferral scheme, delinquent tax, which means interest, is still charged. Under new COVID-19 measures, delinquent tax, which means interest, is not charged. It literally says revenue, but it could be understood to mean cash flow instead of sales. If financial documentation is difficult to prepare, oral explanation may be accepted. But in the case of company of a certain size and capacity, documentation is expected to be shown to tax authorities. In principle, it has to be applied before payment deadline, but this law was enacted on 30th April. It's relatively recently. Taxpayer can apply by 30th June, even after payment deadline.
Thank you for providing this overview. Also, As you can see on this screen, we highlighted key points of the form by comments in English. For example, it says on the upper left corner that the tax office does not require to provide collateral to apply for the tax measures unless clearly possible. And as shown in the lower left corner, we highlighted in English that when measuring revenues in the current year, one-off items, such as the fire sale of assets to generate cash or similar, will not be treated as revenues for the purpose of these rules. The following two slides show the actual application form in Japanese. Satoru, could you briefly walk us through the content of these forms?
Yeah. At the top, reasons for COVID-19 impact is asked, but this could be considered more like a polling question. The form says it will look at the revenue of each month to see if revenue have been decreased about 20%, and look at the expenditure at a monthly average basis to calculate the amount to be deferred at the next slide. This form calculates how much tax can be paid or how much will be deferred. The basic formula is that cash required for business operation for half a year is deducted from cash in hand. Why are the tax authorities asking cash flow information? The idea behind that, tax authorities do not intend to make going concern to be precarious and in jeopardy. So money for the next half year should be allowed to be kept for running a business instead of paying tax.
Thank you. Satoru, you have been 20 years with the National Tax Authority in Japan, and you have been in charge of taxation at the FSA during another crisis, which we saw in 2011, the Great Tohoku earthquake. What do you think will be the approach by the Japanese tax authorities during this crisis?
Tax authority always has a face of the good cop and bad cop. The tax policy measures in response to COVID-19 emphasize the face of a good cop. The tax authorities are inclined to help taxpayers faced with difficulty caused by COVID-19. On the other hand, tax authorities are keeping a strong tax audit force. As the tax authority's operation year ends at the end of June, I don't think new audits are going to be launched in a short term. After summer, tax audit will then be resumed, but will be more selective and may take longer. During emergency declaration, citizens are discouraged from activities which are not necessary and not in a hurry. In Japanese, fuyo fukyu. These fuyo fukyu principle will be applied to tax audit activities. It means that tax cases which are necessary and in a hurry will be prioritized. For example, international tax avoidance. If a firm is suspected of international tax avoidance, it is more likely to be an audit target, and then this audit may take longer. Even if it is not targeted for tax audit, once auditors come, they will review the past year, so it is important to maintain a good level of compliance.
Thank you for pointing this out. As the application procedures with the tax bureaus for tax deferrals have already started, we could gain some experiences. Could you please share these with us?
I should say that primary exchange with tax authorities are by telephone, while the application form is to be submitted by e-tax system or paper. For a start, taxpayer encouraged to ring up a telephone center on payment deferrals set up at the Regional Taxation Bureau, and then for actual application, communicate with the collection group or district tax office. In theory, taxpayer can directly file an application with the district tax office, but I would suggest having a telephone conversation with the district tax office, because at the end of the day, collection officer will review the application. So always better to have communication in advance. Depending on complexity, a physical meeting with the tax office may be set up. And then I should also like to touch upon practical questions. Actually, there are two ways of extension: deadline extension when physically difficult, and payment deferral when financially difficult. The latter is what we have discussed in the previous slides. A company may consider recourse to deadline extension if a matter of 1 month or 2 months. For revenue, even if the sales have not been decreased, if cash flow has been decreased, it is worth approaching a tax office. National Tax Agency guideline says approximately 20%. So it is worth approaching a tax office if decrease rate is 17 or 18%. And if there is a perspective that revenue further decrease in the course of time, this may be considered as a factor. District tax office primarily look at the cash flow as a single entity, even if that company belongs to a large multinational group. Although tax office might ask a perspective of financial assistance from parent company. These are my views.
Thank you. So we have learned that it makes always sense to communicate and to be in touch with the tax office. Thanks. Now, time has come to look at a different tax measure. Balázs, we have heard that the stimulus package has also impacts on the rules for carrying back NOLs. I understand that such rules have already existed in the past, at least for some businesses. Could you please explain to us what kind of rules have been in place and what has been introduced newly?
Yes, absolutely. So first of all, what is an NOL? NOL means net operating loss, a loss you recognize for tax purposes. Under the existing rule, a small and medium-sized enterprise can carry back NOLs for 1 year and offset it against taxable income of the previous financial year for national tax purposes. So basically, you can get a cash tax refund. The first condition is that a small and medium-sized enterprise has a share capital of 100 million yen or less. If the small and medium-sized enterprise is 100% owned directly or indirectly by a large company, it is a second condition that the share capital of this large company should be 500 million yen or less. Now, COVID-19 rules expand the scope of small and medium-sized enterprises for this NOL carryback. If your company, the Japanese company, has a share capital of up to 1 billion yen, and the share capital of the indirect or direct 100% parent company is less than 1 billion yen, the NOL carryback will be available. Please keep in mind that this rule applies to NOLs which arise in financial years which end between 1st of February 2020 and 31st of January 2022. So this is a temporary measure. In special circumstances, the NOL carryback period can also be extended to 2 years.
Thank you for providing this overview. As we know from Japanese tax rules in general, one has to look carefully at each regulation to understand the details and applicability. However, looking at this NOL carryback measure, I understand if a company will qualify for such expanded rules, it may enjoy a welcome extra cash benefit, so it will be worth looking at it. So far, we have presented measures that were introduced in connection with the government's stimulus package. However, when looking at the implications of COVID-19, there may be other possibilities to adjust tax payments by using existing rules and instruments. Balázs, could you please introduce such opportunities to us?
Yes, so in general, a Japanese company has to pay advanced corporate tax that is calculated as 50% of the previous year's tax liability. The due of the advanced tax is the middle of the current financial year. So for example, if you had a large tax liability last year, you have to pay 50% of that amount as advanced corporate tax. However, if the corporate tax amount based on the actual results for the first 6 months of the current financial year is less than 50% of the tax liability of the previous year, you can pay advanced corporate tax based on actual results. For example, you recognize a loss for the first 6 months. You don't have to pay any advanced corporate tax at all if you file an interim tax return based on actual results. The interim tax return would not be audited by the tax authorities in the same way as a final corporate tax return, but it has to be prepared exactly in the same manner as the final tax return. so some sort of effort is needed. It is very important that this method doesn't require any negotiation or agreement with the Japanese tax authorities, and we would be happy to discuss with you how we could support you in preparing the interim tax returns as efficiently as possible.
I see. Thank you for introducing such measure to reduce the interim payment for corporate taxes. What about Japanese consumption taxes? Does the same apply?
Yes, the good news is that the same method is also applicable to advance payment of consumption tax. A Japanese company that files consumption tax return annually is required to make advance payments on a semi-annual, quarterly, or monthly basis based on the previous year's tax liability. Please take a look at the table in this slide. For example, if your consumption tax liability exceeded 14 million Japanese yen last year, you have to pay advance consumption tax on a monthly basis based on last year's consumption tax liability. However, advance consumption tax payment can be made based on actual results by filing interim consumption tax returns. So for example, if your output consumption tax goes down this year because you lose sales, it could be better for you to file interim consumption tax returns based on actual results. You will pay less advance consumption tax. One point to note here is that even if the actual result is a refund position, you cannot get a consumption tax refund at the time of filing the interim tax return. You will be able to get the consumption tax refund when you file the final consumption tax return after the end of the financial year.
Well noted. Thank you. We talked about interim tax payments. However, is there any other possibility to adjust the payment cycle with respect to Japanese consumption taxes? And if yes, what benefits would this measure have?
So first of all, let me clarify one point. The previous idea, which I presented, shows that if you're an annual consumption tax payer, you can reduce advance consumption tax payments, but you can get a consumption tax refund only after the end of the current financial year. You have to wait to get a consumption tax refund. The idea I'm just about to present shows how you could get a consumption tax refund already during the current financial year if you expect that your input consumption tax will substantially exceed your output consumption tax. So the question is, what do you have to do to get this potential consumption tax refund already during the current financial year? Japanese tax law allows your company to select to become a quarterly or a monthly consumption tax payer. For example, your company selects to be a quarterly consumption tax payer from the third quarter of 2020. In this case, you file a final consumption tax return for the period between July and September this year, and you may get the first cash consumption tax refund already in 2020. You will continue to file quarterly consumption tax returns, and you can get the consumption tax refunds quarterly. It is a timing difference, but you can speed up the receipt of consumption tax refunds by selecting to be a quarterly or monthly consumption tax payer. Now, it is very, very important, and please keep in mind that if you select to become a quarterly or monthly consumption tax payer, you have to continue to file consumption tax returns on this basis for at least 2 years. Therefore, before you make a decision to become a quarterly or monthly consumption tax payer, we recommend that you do an estimation of your expected consumption tax position over the next 2 years. In addition, you also have to consider that there will be additional consumption tax compliance, since you have to prepare and file final consumption tax returns quarterly or monthly and not annually.
Thank you. Cash is a concern for many companies during this difficult time. When we look at importers, would they have a chance to improve their cash position?
Yes, it is potentially possible. Generally, importers are required to pay customs duties and import consumption tax at the time of importation. However, importers can ask for a 3-month deferral. Please look at the scenario we show on this slide. Importation will happen in month 1. If the importer files an application for deferral by the end of month 0, it is possible, and if the deferral is granted, the importer can pay the customs duties and consumption tax by the end of month 4. A bank guarantee or other form of security is generally required for the deferral, and the Japan Customs, they have said that they will be flexible with this requirement due to the special circumstances under COVID-19.
I see. So this rule for deferral has existed already in the past. Would there be some new measures for an extra relief due to COVID-19?
Yes, there will be new measures. Japan Customs have announced a further deferral of customs duties and import consumption tax for authorized economic operators and those importers that already utilize duty deferral programs and are affected by COVID-19. If the application for further deferral is granted, the payment is deferred until up to 2 months after the COVID-19 situation is resolved. However, this is a need-based deferral. Importers will be required to demonstrate to Japan Customs that they are truly affected by COVID-19. It is important that Japan Customs haven't issued guidelines yet what cases or situations they would accept for this additional deferral. However, they have indicated that they will be flexible due to the special circumstances under COVID-19.
Thank you. Again, here we see that it is imperative and important and worthwhile talking to the authorities to find out more. Other than special tax measures from the stimulus package, we would now like to introduce other opportunities to alleviate the COVID-19 impacts by pursuing cash tax management activities or by reducing the overall tax rate of a company. As we have seen with special COVID-19 measures, some of them are linked to certain conditions, for example, the decrease in revenues of about 20%. Balázs, what can companies do if they don't fall within such categories?
Well, they can do many things. They can look at their capital structure and their enterprise tax position. They can reconsider their financing strategy, and they can also look at their valuation losses.
I see. Due to the limited time today for such topics, we can only look at them in an overview fashion, as listed on the next slide. Balázs, which topics for consideration may be most worthwhile to look at?
So let me highlight the following areas for consideration as examples. So let me go to the first one, which is local enterprise tax. Now, your company in Japan pays different rates of enterprise tax on taxable income depending on the share capital of your company. If your company has a share capital exceeding 100 million Japanese yen, the enterprise tax rate on taxable income is approximately 4% in Tokyo. However, if your company has a share capital of 100 million yen or less, the enterprise tax rate on taxable income is approximately 10%. So if you pay enterprise tax on your taxable income at different rates, your effective tax rate on income will be also different. So there might be some planning opportunities available by reviewing or even changing your share capital amount. Let me go to the second item, which is tax consolidation. So if you have at least 200% owned Japanese companies, and one of them is loss-making and the other company is profitable, tax consolidation could help to offset the losses and profits for national tax purposes. Tax consolidation is not an easy exercise, and there are quite a few issues to consider. However, it is a potential idea, tax consolidation, to consider for the offset of gains and losses in a 100% group situation. The next item is impairment and valuation losses. Under Japanese tax law, it is difficult to meet the strict conditions to deduct impairment and valuation losses for corporate tax purposes. And based on experience, companies just tend to disallow valuation losses when they prepare their corporate tax returns. However, as we are currently facing an extraordinary situation, it is worth considering seriously whether these losses could be deducted for corporate tax purposes or not. Let me also spend some time on financing issues. For example, if your company in Japan has foreign loan financing, what about interest expense on these loans? Are they still deductible under ThinkCap and earnings stripping rules, even especially if your profitability is expected to go down and you lose revenues? Maybe you have too much leverage. Let me also consider the opposite situation. If your company has no foreign-related loans, have you considered if additional loans could generate tax savings in the form of deductible interest expense? So maybe the time has come to review your overall financing strategy and structure. And let me also talk about transfer pricing a bit. Here again, there are quite a few issues to consider. You should review your TP policy and intercompany agreements. The question is, who should bear COVID-19 impact? Consider if you need to change your TP policy or any of these agreements. In addition, for example, if you're an APA, you may have to review the critical assumptions as well.
Thank you. So each topic seems to require some extra thinking. Therefore, I would like to encourage our audience of this webinar to let us know separately if we can explain these topics in more detail. What is next? In our first polling question, we looked at the developments in the past. Now, with our second polling question, we would like to take a look into the future. Therefore, our question is, what are your expectations and outlook for the rest of 2020? Please note that with this question, you have the chance to give multiple answers. And the possible answers are: 1, we are expecting business to return close to former normal. 2, we are expecting, following a change to business, to move to a new normal. 3, we shall need to substantially restructure our business model in Japan. Or 4, where needed, we will support partners such as suppliers, dealers, or joint ventures in distress. So please cast your votes now out of these 4 possible answers.
And once you have voted, may I remind you as well that you may pose questions to our experts of EY during this seminar with your chat function. But here we go back to the polls.
Thank you. So we are waiting a little bit longer for the votes to come in. And now we have reached close to 80%. So I would be happy to present the results. So 25% have said that they expect the business will return close to former normal. 58% say we will move to a new normal, which we assume would be a lower level than before. And 38% believe there's a need to substantially restructure the business in Japan due to this crisis. And others may see a benefit from supporting partners. That is a vote of 13%. Now we will close with our third polling question. And based on the following thinking, we do not expect things to stay the same after COVID-19. When we look at tax departments, as they have developed in the past, we have already seen some rapid shifts, especially with larger organizations. So it will be interesting to see the results to the following question, which is, what are you doing to adopt towards a future finance and tax department? Here again, multiple answers will be possible. The possible answers are: we are currently improving finance and tax digitized processes. 2, we are in the process of evaluating how to accelerate digitalization. 3, we found our finance and tax processes to be fit for purpose. 4, our finance and tax processes will be more centralized. Or 5, we consider internal or external outsourcing of finance and tax functions. So please cast your votes now.
I see only very few people voted until now. Now a few more votes are coming in, but still less than 50% of participants.
Yes.
So
now we have 60, more than 60, close to 70% of answers.
Let's wait a few more seconds.
Thank you.
And your last votes, please. Yes, still coming in. And here we go. Going,
Yes.
going, gone.
So 75% have voted, and the results are as follows. 33% believe that it will be important to improve the finance and tax digitized processes. 33%. 30% believe and assume, expect that they will have to evaluate how to accelerate digitalization. 42% have answered, we found our finance and tax process to be fit for purpose, so they are happy with the current status. And only 4% have voted for the option that the finance and tax process will be more centralized. And last but not least, 13% would consider outsourcing solutions for the finance or tax functions. Thank you for your votes. So let's move on with these results in mind. Throughout this webinar, we have looked at emergency measures to ease the impacts of COVID-19. However, looking ahead, once the waves of the COVID-19 storm will have calmed a bit, and when the outlook on the businesses becomes clearer again, what scenarios do we see emerge? At the moment, we are in the midst of the first two phases, adapt and act, where we are evaluating tax deferrals, cash tax, and transfer pricing measures. However, we can also think about the future transformation, which will take place in the coming, say, 2 years. We are seeing the following scenarios. 1, fairly recover and improve in a V-shape. Digitalization may be an essential driver to support this development. Or 2, some companies will sustain at lower levels, as we have seen also in the polling question earlier, possibly in an L or U shape, aiming to maintain profitability, manage cost, also for tax efficiencies, and aiming for lower headcounts while employing more automation. And third, another option or possibility will be that a group of enterprises or businesses within larger organizations will be at a crossroads. We can describe this development scenario to look like a Y shape, going either out of business or up. For those organizations, disposals may pave the way to survival, either selling part of a business or being sold off in its entirety. And this reflects also the results of the earlier polling question, where you have raised a number of concerns on how things will develop. What to do next? During this webinar, we have learned about various tax measures and other possibilities to mitigate the COVID-19 implications. We have seen measures from the stimulus package in order to defer tax payments and social security payments. And these measures will only be granted if a company has fallen into hardship. Second, then we have seen measures that can be applied without the need to demonstrate hardship, which may still fit well to the current situation, such as adjusting interim tax payments for direct and indirect taxes. Then we recommended looking at other opportunities to improve your cash tax position and to fine-tune your company's tax rate. However, in order to stay focused and in order to take the next steps in a prudent manner, Satoru, what will be your recommendations and what to do first?
Taxpayers should, at least for a short term, continue to monitor the impact of COVID-19 and tax measures offered by the government, including their practice. While the emergency declaration of COVID-19 in the Tokyo area was lifted last week, the impact of COVID-19 continues to kick in, and COVID-19 tax measures cover a longer period. For example, loss carrying back scheme, which Balas explained, is applicable to business years ending in January 2022. The behavior of the tax authority on the actual application of the measures is still to be seen. Proactive engagement with tax office for deferral and other measures and preparation to manage future controversy will be the key points.
Thank you. How about you, Balas? What should a company focus on right now?
I would recommend that companies should focus on cash tax measures. For example, how to minimize advance taxes or how to secure corporate tax or consumption tax refunds. Review of your capital structure and financing structure could also lead to cash tax planning opportunities. Enterprise tax planning, by adjusting the amount of share capital, can also be an interesting exercise. Annual planning, loss planning is also expected to become important.
Thank you. We have now come to the end of the presentation section. Thank you for choosing to join this webinar Advantage Austria. We look forward to supporting you during the ongoing COVID-19 situation, and we hope that you, your families, and your teams are safe and secure in this challenging time, and we look forward to meeting with you in the future.
So thank you very much, Mr. Dumont, and also your experts. I learned a lot, I have to say, and I think most of us here have. I would like to come then to the Q&A section, and let me see here if we got some questions in here. Yes, hold on, just I have to apologize. It just takes a little while until I get them here. Yes, I get here one question. Are there any tax measures mentioned or additional to what you have presented that are only applicable for Japanese-owned companies, thus excluding foreign subsidiaries? If I understand this question well, it means is there any distinction in with these tax measures now by ownership of the companies? Ms. Balas, would you answer this?
Yes, so basically, Japanese tax law doesn't make a difference between Japanese companies or Japanese companies which are owned by foreign companies. So basically, the same tax measures are expected to apply to all Japanese corporate taxpayers, regardless of the ownership situation.
Thank you very much, Mr. Nadia. I have another question here. How would you evaluate Japanese tax measures, comparing them to Austrian or German similar measures that we've heard of? Maybe I may ask this question to one of the senior partners of Ernst Young or EY. Sorry, I think this is your official name now. Mr. Musal, please, would you answer this question?
Yes, thank you very much. That's a very important question, and it outlines the effort which both countries and regions have made. And I'm pleased to share with you that both Japan and Austria, as well as Germany, have made enormous efforts to provide funds both as loans but also as tax measures. For example, in Japan, for the tax deferral, a quarter of the package has been earmarked. And I see that also Austria and Germany have provided for quite some packages, including deferral of taxes where people had been relieved of making prepayments, and also they are in a similar size.
Thank you very much, Hans-Peter Musal. He has not been active now during this presentation, but has been with us all the time. And yeah, he is a real old hand, old Japan hand, if I may say so. So a lot of experience here in Japan and of course internationally. I have one other question here. We are running a bit late on time, but I think we can still take this question. Are there non-repayable grants? Are there possibilities to save labor then it doesn't to save labor costs? Yes. Are there non-repayable grants and are there possibility to save labor costs? Now, if I may add one word here, we have done already in March, end of March, one webinar on grants, on loans and grants under COVID-19, which then has been updated, and we have quite a good collection of possibilities for also foreign-owned companies, but especially SMEs here in Japan with grants and loans. I think this is a bit outside the scope of this tax webinar here, but I don't know if any of the partners of EY would like to say a word to it as well. But we will publish also, well, actually it was published right at the beginning when Dominik Vranischitz gave the hyperlinks to the webinars we have done on similar questions. That one webinar, I think it was 30th of March, with an expert, Miho Tanaka, answers all these questions. But now I give the microphone to Hans-Peter Musal again.
Yeah, I have little to add. Miho Tanaka had presented that very well. The only addition is that the cap which had been provided for funds, for example, for furloughed staff, which in German Kurzarbeit Kurzarbeit would apply, there has been a cap of 8,330 yen per day, the maximum you could get as a subsidy, and the new package will increase that to 15,000 yen per day, which effectively means that small and medium-sized enterprises will be able to subsidize monthly salaries of up to 300,000 yen, and that really helps.
Thank you very much, Hans-Peter Musal. Here you have again the names of all our speakers today with all their exact addresses and communication and so on, and their professional background and experience. So I would like to say thank you to them, and they are again in not in the order of precedence, but in the order of the alphabet. Araki-san, Satoru Araki, thank you very much for your presentation, as well as Jürgen Dumont, who has been guiding you through this webinar. Hans-Peter Musal, whom you just referred, partner at EY Japan, and Balazs Nath, also thank you very much. Ladies and gentlemen, we have covered a huge amount of tax measures. I think it's once again an example how serious this whole situation of COVID-19 is being taken by the Japanese government, and how seriously people are really aware that the economy, which has been so badly damaged, and economists, that's all of us, needs really help in this situation. Especially our Austrian subsidiaries here, I would like to encourage you to take advantage of these measures here, as well as of the loans and subsidies, which we have mentioned before. And if you need professional help with your tax matters, now you have got the right persons to contact here. And of course, we are always here also to help you with all your needs that you can have with business in Japan or with Japanese companies. With this, I would like to thank everybody for being part this afternoon, or in Austria this morning. We have 1 hour and 5 minutes, so we are almost in time, in our time frame of 1 hour. Thanks especially once again to our experts of EY Japan, also to my colleague Dominik Vranischitz, who is here together with all our other colleagues and myself to assist you with doing business in Japan, whatever that may be. And yeah, thank you everybody for being here with us today as audience. We're looking forward to seeing you soon again, either at another webinar, but hopefully in person very soon once again. Thank you and good afternoon. Goodbye.